Hey everyone, welcome back to Corporate Decoder. Today we are diving into the annual shareholder report of Laudus Trust Schwab Select Large Cap Growth Fund. And while it may seem like just another financial document, hold on, because we will talk about how they made some pretty big gains and then turned around and lost even bigger. If you're into getting the truth out of corporate jargon, smash that subscribe button. We've also got a Discord community cooking. You can find the invite link in the description below. So what is this form about? Basically, it's a certified shareholder report, which means that the big bosses are signing off on the accuracy of the information about how the fund performed over the past year. This covers the period from April of the previous year to March of this year. Think of it as an annual checkup report. Alright, so the fund wants to keep you in the loop. If you want even more information, you can check out their website, or if you're feeling old school, you can call them or even send an email. The important point is that as an investor, you have the right to know what's going on, and they are telling you how to find out. Here's the juicy part. How much did it cost you to have your money in this fund? For every $10,000 you had invested, it cost you $75, which they express as a 0.73% expense ratio. So for every $100 invested, about 73 cents went to fund expenses. It's always important to keep in mind what percentage of your investments go towards expenses so that you can pick funds wisely. Now let's get to how the fund actually performed. Over the year, the fund returned 4.75%. The S&P 500, which is a big measure of the stock market, did better at 8.25%. But the fund mentions another index, the Russell 1000 Growth Index, which returned 7.6%. The fund managers say that this index is more like what they invest in. It is important for you to understand how your funds performed relative to the general indices, but also relative to more specific indices in the same market. So which investments did well and which ones didn't? One investment that didn't help the fund's returns was consumer staples, including Celsius Holdings, which they ended up selling. However, communication services like Netflix and information technology securities did pretty well. Looking at individual companies, Microsoft didn't help the fund's return much, but Nvidia was a big contributor. Another company, American Century, also underperformed the market index. They had trouble with industrial and healthcare stocks, but did well with information technology securities like Apple and communication services. Individually, Dexcom didn't help returns, but Apple was a big winner. Remember, past performance doesn't mean future success. Investment returns can go up or down, and you could end up with less than you originally invested. Want to know the most recent numbers? Head to their website. Now, let's look at the average annual total returns. Over the past year, the fund returned 4.75%. Over the last 5 years, it returned 15.555%, and over the last 10 years, 13.01%. To compare, the S&P 500 returned 8.25%, 18.59%, and 12.50% over the same periods, respectively. Once again, note that the fund is doing worse than the more general indices. Key stat alert, the fund spent over $13 million on advisory fees. Remember though, funds can be partially absorbed by the advisors, making your returns look higher, so you should not take it at face value. Also, remember that you will have to pay taxes on distributions. Here are a few quick stats. The fund has about $2 billion in assets, holds about 120 different investments, and had a portfolio turnover rate of 26%. This turnover rate means that the fund sold and replaced about a quarter of its holdings during the year. The fund invests heavily in technology, hardware, software, and equipment, and media companies. It also invests in financial services, consumer goods, energy, and other categories. Want to dive deeper? You can find the fund's detailed reports, financial info, holdings, and even how they voted on company matters online. The company has a code of ethics for the big bosses and financial officers. Over the last year, there were no changes or waivers to this code. You can actually read the code as an exhibit, meaning it's part of this filing. The board says that Kimberly Patmore, Michael Beer, and Derek Penn are financial experts serving on the audit committee. This committee helps make sure the numbers are correct and that everything is above board. How much did they pay the accountants? The audit fees were about $33,000 and tax fees were a bit over $3,000. It's important to know the difference between audit fees and tax fees, as those both have two different use cases and are very different. The total non-audit fees were $1.5 million in the current year, but a lot more the year before. According to the report, all non-audit services were pre-approved by the Audit, Compliance and Valuation Committee. We're scrolling all the way down to the financial highlights. The report says that the fund's value started at $24.77 per share, but ended at $23.42. The fund also had a total return of 4.75%. This total return means what you earned, but it doesn't include the fees or taxes you had to pay. Looking at their portfolio, they invest a lot in Tesla, Amazon, and other brand names. The liabilities include investments bought for $7.5 million, also fees payable. The statement of operations shows a net investment loss of over $3 million. Ouch. However, net realized gains helped bring things back up. This is not exactly the story the fund was selling from its introduction. The overall increase in net assets was about $116 million. The company had 91 million shares at the beginning and 84 million at the end, with a corresponding loss of $200 million to bring the total to around $2 billion. Now, for a broader take on these results, the Schwab Select Large Cap Growth Fund had a mixed year. While they saw some gains, their overall performance lagged behind the S&P 500. Also, expenses ate into returns and some investments didn't pay off. You should also consider that this report tells a bit of a two-faced story. The intro paragraph and general tone seem to signal very positive results. However, if you scroll all the way to the end and look at the financials, you will see a loss on net investment, which is not something that is mentioned throughout the entire document. They had a mixed year, while they saw some gains that is mentioned throughout the entire view to store all the way to the end. And look at the financials, you will see a loss on net investment, which is not something that is mentioned throughout the entire. You should also consider that this report tells a bit of a two-faced story. The intro paragraph and general tone seem to signal very positive results. However, if you scroll all the way to the end and look at the financials, you will see a loss on net investment, which is not something that is mentioned throughout the entire of and general tone, seem to signal very positive results. However, if I write, that's our breakdown of the Schwab Select Large Cap Growth Fund's shareholder report. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more conversation and community. Thanks for watching, and I'll see you next time.